Welcome back to another episode of Multifamily AP 360. And today's our guest is Pete Neubig from VPM Solutions. Welcome, Pete. How are you doing?
Welcome, Rama. Thanks for having me.
A little bit about Pete. Pete co-founded Empire Industries Realty and Property Management in Houston, Texas, which he sold to Might Management, where he served as VP of Eastern Operations. He is now the co-founder and CEO of Solutions, an online platform connecting the real estate industry with virtual team members globally. Pete is a past board member of the National Association of Residential Property Managers, NARPM, and hosts the NARPM radio podcast. In his free time, he runs marathons with his wife, Felicia. So, with that, Pete, you want to add anything to your background?
I think you got it. You nailed it. That's about my life in about 30 seconds.
Awesome, awesome. So, share me a little bit more about how exactly you get into real estate space, then why you switch it towards virtual management company, PM.
Yeah, so interesting. So I'll give you the cliff notes. When I was in my early 30s, about 30, 31 years old, I was working. I had a nice job, W-2 job. I was in IT at the time. It was about 2001. And I realized, man, I wanted to I thought there was more to life than just going to work every day. And I didn't think I was smart enough to build a business, which is funny because fast forward 20 years later, I built and sold one and built another one. But so I decided I'm going to buy real estate. And I found a local real estate investment group, which I highly recommend to anybody who's out there. I know there's a lot of meetups now and there's a lot of information. This is prior to the internet being what it is today. And was able to start buying real estate. And I bought so much real estate and I loved buying real estate, but I didn't really love managing the real estate. And I ended up getting a business partner, and he and I bought 31 homes. I also was a passive investor in two apartment complexes and a lead investor in two other apartment complexes, still working full time. And finally realized that I couldn't manage all this stuff. And that's when we ended up creating Empire Property Management. And the original intent was to build a management company. And me and my business partner, Steve Rosenberg, we were going to basically buy and own 500 properties, 500 homes. That was the goal. And next thing you know, Steve is like this sales guy and he's basically helping other investors manage their properties. So next thing I know, we had 67 properties that we were managing. I only owned 31 properties. And I'm like, hey, what are we doing here? And we realized pretty quickly that we were able to make money on the management, and our properties that we actually bought were actually cash negative. So we're taking the money from the management to pay down our houses or pay off the maintenance and all the issues that we have with our personal houses. So we ended up pausing the investing and building the management firm up to about, I think we had about 900 single family homes in three markets. And then we sold that in 2019. And again, was to then just be a regional vice president or high level manager for the company that bought us. But I realized at that point, I was really not employable, if you say. I like doing my own thing. So I then partnered with some other folks and we built VPM Solutions because we ended up building our property management firm on virtual team members. I had 23 of them. And because of that, we were able to run our management firm very proactively, but more importantly, very profitably. And so I'm like, well, let me take that concept and help other people in the industry, property managers, investors, and realtors to utilize virtual team members to help them get great people at low cost. So that's a journey that I started back in 2001.
Yeah, awesome. Thank you for that sharing your journey. So before jumping into VPM solutions, so I have a few other questions like, so you invested as passive investor. Share me that experience, why you invested as passive.
Investor?
Passive.
Yeah, so passive investor. So just so you audience, so passive investor means that I invested money, but I didn't really do anything. So it's literally supposed to be passive income. And the idea behind that was instead of having my money in an IRA, traditional IRA, I moved it out of an IRA into a self-directed IRA. The self-directed IRA allowed me to invest into a business or a property. So I invested it into a property, and I was led to believe that we were going to make a lot more return on the property than if I just kept it in the IRA. Unfortunately for this deal, that deal went south and we ended up losing everything. So I lost all my money in that deal, and more than happy to talk about the details of that. But the reason why I did a passive investment was one, I didn't know enough yet to be a lead investor. So I wanted to learn. And so part of my deal with the lead investor is like, I'll give you money, I'll be a passive, but I'll be semi-passive. I want to be your shadow and I want to work for you for free. And he's like, work for me for free? Absolutely. So I would work Monday through Friday, 8 to 5, and then I'd get off at 5, and then I'd go to his house and I'd work for him from 5 to 9 or 10 o'clock every night. And that's how I learned multifamily apartments. And that's when I became my next couple of deals. I was the lead investor in a 52 unit and a 39 unit. I was a lead partner. But the main reason why I did passive was to learn. And what's the old saying, Rama? If you could take a job not for the money, but for what you can learn.
Sure, sure. So what went wrong with that passive investing? Can you share that?
Yeah. So that property was a 100-unit apartment complex in South Houston, and it was a Class D apartment complex, right? And it was in between two other Class D apartment complexes. So there's three of them, and we bought the middle one. And the lead investor, his vision was to invest money into the property and make it a C property. The problem was the other two complexes were not going to be C complexes. So we invested the money in inside the units instead of outside the units, meaning we should have built a damn fence around the thing. And what happened was we made the kitchens, the bathrooms nicer, right? So we invested money into it, but the quality of resident didn't go up. We ended up not, when we couldn't rent anything, we had to rent it to this Class D minus folks, and then they were really hard on the property. We didn't have enough money going into the property either for this vision, for this solution. So we were taking any money we made in the property, investing it back into the property. In hindsight, what we should have had is, instead of just having enough money to close on the property and pay the taxes and insurance, we should have had 6 months reserve, or we should have had the capital improvements we're going to make in cash as a reserve. We didn't have that. So we were on a shoestring budget. So if anything failed, then we were going to have a hard time. And so what happened was the plan stopped, it really didn't work. We overspent on the inside of the units. We couldn't get good people to rent them. We had to lower prices or get worse people in there. Then they weren't paying their rent. Then we found out the manager was stealing from us. The maintenance guy was stealing from us. Then everything just like Murphy's Law. What could go wrong went wrong. We had a gas leak at the property, and we had a balcony fall at the property. And so all of those, we just were negative on the property. We reached out to the bank. We asked the bank if we can work with them. They said, absolutely. Don't pay us any more. Don't pay us a mortgage for the next few months. We're going to go ahead and reset the loan. And then they sold the property from under us. They basically foreclosed on us. We owed 1.5 million on the property. They sold the property for 2.1 million and then came after the partnership for 1.5 million, even though they made money on the deal. Years of litigation, and we finally settled for, I settled my portion for about $30,000, which wasn't ideal, but it was better than having $1.5 million come after me. One mistake, I made mistake after mistake, Rama. So just for your audience, the first mistake I made, I had a mentor and I believed in a lead partner. But because I didn't know much, I just let them make the decisions. And in hindsight, I wasn't ready. Even as a passive investor, I probably wasn't ready. I should have read more and learned more and should have asked more questions. Number two, I knew at the closing table we didn't have enough money. We actually had to roll in our taxes and insurance. Like normally, you have to pay that out of closing. They rolled it into the closing. Got to remember, this is 2001. They will not do that now. It's called mortgage fraud now. Back then, it was like the Wild West. You do whatever you want, right? So that was an issue as well. I also hired an attorney, but I didn't read the docs myself. I didn't ask him to explain the docs to me. He just said it was okay. He was lazy. And there was a box check that said, even if they took the property from us and they sold the property for higher than what we owed, they can still come after us. BS is what it is. And that check box shouldn't have been there. We shouldn't have signed that document. So looking back, I thought like I could just pay these people and they have my best interest at heart. And they just don't. They don't, it's not their money, it's not their credit. You have to take ownership, accountability, and responsibility for your own actions. And I learned that the hard way. So the other thing too is I signed personally for the note, even though I was a passive investor. If you are a passive investor on any deal and the lead partner needs you or wants you to sign on the note, run like hell because you're a passive investor. You're supposed to be just a money guy. Now, that doesn't mean per the operating agreement, if they make a cash call, you have to inject cash with your percent of ownership. That's different than signing on the note because if they go south, not only is the money that you put in at risk, which you lost at that point, but now your credit and any other monies that you have is at risk. So if you're a passive investor, you don't have control over that asset. Do not sign personally for any note. And if that means you can't get a deal, then walk away from the deal. If you get anything else from this podcast, get that.
Awesome. Thank you for sharing that experience. Yeah, really great learning for passive investors. Yeah. So coming back to your main services, VPM, right? So what are the core services your company offers? How do they different from traditional other VPM, other companies?
Yeah, that's a great question. So a lot of virtual companies, I call them the cab companies. They still do it the old way. I'm like Uber. I do it the new way. So the old way is I have a company in the Philippines, and if you pay me some money, I'll go recruit in the Philippines. I'll hire somebody, and then I'll lend them out to you, and then you pay me a rate, and don't worry what the person makes. And they work for me and for you, right? And so and they get some benefits. With us, we're an online platform and we're a direct hire model. So you directly hire the person. And because we don't have a company in any country, you can hire anybody as a contractor. So we're in 120 plus countries. That's where our payment processor can go, and you directly negotiate with the remote team member. You decide what you're going to pay them, and then they pay us a platform fee of 10%. And so for the company, for us in the US, it's free. So you negotiate, let's say you negotiate with Fred for $10. Fred will make $9. VPN makes $1. That's kind of the way it works.
Got it. Thank you. So specifically, what kind of services you're offering for real estate investors?
Yeah, so we market for people to get on the platform to work for the real estate industry in the US and Canada. That's what we do. Now, the fact of the matter is, lots of people in the Philippines, Mexico, Costa Rica, South America, and Africa don't have a lot of experience in real estate in the United States, right? So we offer free courses so that they can learn about certain job roles or certain technology inside and those courses, again, they're free, and they can pass the test and get a certification. So we offer back office workers. We match companies with back office workers, meaning if you need an appointment setter or a lease marketing person or a SEO person or a property accountant or a maintenance coordinator. So there's about 40 or 50 type of job roles that are either a brokerage, a realtor, a property management company that's either SFR, MFR, short term, that there's roles they need to fill. And filling them in the US seems to cost way more than what these companies can afford. But you can get somebody who's obviously bilingual, college educated, and a great fit for your organization that sees it as a career versus a job. And you get great people. And I built my whole company on people in Mexico and Philippines and Costa Rica and all sorts of different people. And they're amazing people all over the world. So you no longer need to have somebody that lives 20 minutes from your office to drive there. With the invention of Zoom and soft phones, IP phones, you can have anybody work for you anywhere in the world.
Awesome. So how do you ensure quality services for your clients? How do you ensure quality services for your clients?
Yeah, we are just a marketplace. So the way I try to ensure quality is through the courses and having the tests. But at the end of the day, you're the one who's interviewing the folks, right? So it's if they say they know a certain thing, then you need to interview. When you interview them, you need to interview to make sure that they know that certain thing, right? So I know maintenance coordinator. You have to ask questions based on that. Because it's a direct hire model and they're not working for me, they directly work for you. You get to train them, you get to hire them, you get to make the final decisions. If you don't have really good hiring practices, then you can, for a fee, we will hire for you, and then we'll give you candidates that you can then review and determine which one that you like the best and use our hiring process. But yeah, it really comes down to buyer beware. You're the one that's actually interviewing and hiring the folks and yourself.
Got it, got it. So what are the biggest challenges property owners currently facing and how exactly your company is helping them?
So it depends on what type of business they're in,
Yeah.
right? We do a lot with single family property management because that's my background. And I would say that the number one job that people are hiring is maintenance coordination. That's the number one biggest challenge. The second one is property accounting, For brokers and realtors, the number one job is the transaction coordinator, and appointment setter is the second one. For multifamily, they have not really embraced the virtual assistants yet. It's coming because the economics doesn't work. And unless inflation goes down dramatically and prices go down and hourly rates go down, the MFR is going to have to use them. But they like having people on site. But the MFR could use property accountants, they can use lease marketers, leasing administrators. They can use a lot of people to do anything that does not require to be on the property or licensed, you can do as a remote team member.
Awesome. So, can you share any success story where your services significantly improved efficiency or profitability for a client?
Yeah, I'll share my personal story. When I owned my property management firm, what happened was we had everybody in the States, and our number one expense was payroll. Right. Number two was we had this thing called an office back then. This is pre-pandemic, and payroll was about 56% of my revenue. And that is high. In business, I've been taught it should be around 30 to 34% in a service-based business. Okay. So obviously I was 20 points higher than that. The only way to be profitable, because hiring people was so expensive, was I have my team stressed out. And by having your team stressed out, that just means you have more work than you have team members. And what happens is you're running a reactive company and you're increasing your churn rate of team members. Because you're running reactionary, you actually increase your churn rate on clients. So we were over 34% of churn rate on clients. The industry average is 20%. When we hired remote team members, I was able to hire more people because I'm paying them less, even though they're getting great pay for where they live. Just like somebody in California gets paid more than somebody in Arkansas. Somebody in Arkansas gets paid more than somebody in Mexico, and somebody in Mexico gets paid more than somebody in the Philippines. It's just the way it works because of cost of living, right? So don't think that we're not paying these people. They're actually getting more money through our platform than they've ever made before in their life. All right. But I'm able to hire more people, which means I can give a better service, right? So I can be more proactive. And so all of a sudden, my churn rate went from 34% down to about 23%. So we were still a little bit higher than the average, but it went down dramatically. And of course, every dollar saved is a dollar earned. And then we were able to increase our revenue because we're able to be proactive. All of a sudden, my team was able to reach out to clients and ask them, do you have more properties that we can manage? Did you know that we can buy and sell properties for you? Do you have anybody that you recommend? And guess what? We did. And our revenue increased. And because our expenses stayed the same, my revenue increased, my churn reduced, which meant more my revenue increased as well. We were able to get our payroll costs down from 56% down to about 34%. So all of that made us and I had more people stay. So my churn rate on my team went down, my revenue went up, my expenses stayed about the same, but I was able to hire more people and give better service. So that's the success story that I personally lived using remote team members.
Awesome. Thank you. So, what are your company's plans for next 18 to 24 months?
So for VPM, we are going to embrace two big initiatives for next year. Number one is data. We want to be the data king when it comes to remote team. What's the average rate for a specific job role in a specific country? And how is that across the board? So you can see all the data for your company and across the whole platform. And then the second initiative is AI. I think if you're in tech or even any business, if you're not looking at AI and how it can help your company in any way, I think you're going to be out of business, honestly. So we're looking at AI initiatives on helping people hire, find the right matches, taking tests, creating more exams. You can use AI in just about every aspect of our business. And so we're really going to push that in Q2 of next year.
Awesome. So, any personal habits that are helping you to be successful?
Yeah, I have a morning routine that I started about a year ago that I really thoroughly enjoy. So I'm an early morning guy. I get up around 5 o'clock and I start my day around 5:15, 5:30. And I start with walking. I walk 2 miles with my dog. Then I walk to the gym, which is another 3 miles away. I lift, I hit the sauna, I walk back, and then shower up, eat, and I start my day. And I used to hate walking. Like I'm a runner I used to run marathons. I got to update my bio because I don't run marathons with my wife anymore. She runs the marathons I support now. But the walking has cleared my head, has allowed me to listen to more books and YouTube and just educate myself. But a lot of times I'll be walking and I'll have my earbuds in and I won't have nothing playing. And I'll just notice the sunrise. I'll just notice like just things that I've never noticed before. So it's really been helpful in calming me down and really starting my day on the right path. So I know that's goofy, but that's what works for me. I also started tracking my calories and I've lost about 30 pounds and I feel healthier. And it's watching what you eat and not just shoveling crap in your mouth at any time of day. So I have certain times that I try to eat has been really helpful. And I used to do Ironmans and marathons, but when I stopped doing that, I kept eating like I was doing that. You can only eat what you're expending. So,
Awesome. Thank you. So any one book that impacted you?
book. Yeah. So the book I always recommend is Traction by Gino Wickman. It's the entrepreneur operating system. If you're not familiar, I highly recommend it. There's another book called Get a Grip, the Traction Story. That's a story format, so I recommend you read that book. And then the Traction book is like the Bible. I bought like 10 of them. I give them out all the time. Matter of fact, I got to buy more copies because I gave out my last copy. And run my business through Traction, through EOS. I ran Empire that way. I run VPM that way. So
Oh,
big fan of Traction.
awesome. Thank you. And how can listeners connect with your page?
Yeah, so I'm old school. I'm on LinkedIn and Facebook, Pete Neubig, Neubig. But if you really want to get in touch with me, email me, Pete at vpmsolutions.com. I still in charge of my own email. I don't have an executive assistant that runs my email. Or you can go to our website, VPM, so virtual property management, vpmsolutions.com.
Awesome. Thank you very much, Pete. Thank you.
Thanks, Rama.